The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we closed out Friday trade with a little bit of pressure at the grades in oil seeds. Cattle futures, especially feeders, had a decent rebound to close out the month of January. It has been a wild week in these markets. Let's talk about it. Joining us, Dwayne Bussey with Bolt Marketing. Dwayne, welcome back to the show. Hope all is well.
Yeah, no, it's good here, but like you said, it's been one heck of an interesting day in the markets today. What are we, 11 days in the office here now for Trump? And I feel like I'm watching social media and Twitter more than I am watching charts and graphs, but that's the market we have today.
That's very true. Well, let's start with the grains. Again, outside of soybean oil, lower on Friday. It seems like a combo of tariff fears and then the traditional end of the month kind of positioning is kind of what I gathered on Friday. Would you agree?
Yeah, I do agree. To back up, I mean, yesterday afternoon, I'm sitting at my kid's basketball game and you start to hear that President Trump said the tariffs are going to be on Canada and Mexico this weekend, or actually at the point on Thursday afternoon, I thought they were on immediately. And then you learn overnight, well, it'll be by this weekend. And then the markets didn't really react horrible today. I thought we held it together pretty good. And then I started to read and do research that a lot of people thought there'd be a 11 o'clock or 11th hour agreement, and then we wouldn't go into this major tariff trade war. And then they were pushed back to March 1st, and then we decided we're skipping February now. There is no February. This year, tariffs are back on as far as the 1st of February now again. So it's been a back and forth crazy day. But yeah, let's just, all that pushed aside, if we can just look at the markets, I agree with you. Let's remember that it's the end of the month. Funds are extremely long, a lot of these contracts, and it felt like just some profit taking and position squaring.
Thinking about corn specifically, I know we had a large open interest here this week as well. You mentioned the funds, how long they have been here in this market. We've had a lot of farmers selling on the recent rally. And I know, for instance, March corn, we were kind of watching that 480 level. If we got below that on Friday, I think that'd be an outside reversal for the week. So, I mean, a lot of things at play in this corn market today.
Right. Yeah, sure are. Like you said, I like that you mentioned the open interest, and that's actually a concern for me because the open interest is now record long, or record open interest. And who's probably record long is probably the funds now anymore. We'll find out with the Commitment of Traders report. That bothers me a little bit. I mean, as a producer, I love when funds are buying. We all do, right? That's what pushes the markets higher. But it's kind of an odd time of year, Jesse, for them to be long this market, and gets me just a little bit fearful. If the funds are going to be long before we get into spring planting, summer weather rallies, who's going to be there to buy it and push the market even higher? And I guess the answer is, if you just don't have any sellers, markets just go higher anyway. And funds can always go record long. Records are made to be broken, but it's something to be aware of, especially for the producer, Jesse. We sat back, everyone pretty much had a pretty good corn yield. If you still own your old crop corn, it's time to kind of look at this market and be aware of, we've had a heck of a rally. We're almost $1 off the lows. And gosh, I mean, know that the funds are record long or near record long, and just know what could happen the other way. I do like the world stocks are very tight in 2025 for corn, but it's probably time to reward this market. We were selling the corn board for our farm today, just thinking, let's just be hedged over this crazy weekend and go from there. I don't like the basis locally here in Northeast South Dakota. Basis is wide now, which is also kind of an indication of, does the corn market really need to rally? I think the crop is there. So we went short the board, see what happens. Monday, you and I have something all new to talk about, I'm sure.
It's very true. Very true. Well, and I'm glad you brought up basis, because I know a lot of guys and gals, they just take a look at that cash market and make it sales there. Sometimes they don't want to play the board necessarily, but in markets like this, and I think old crop corn's a good example here, sometimes you got to use all the tools in the toolbox, right, Dwayne?
I think so. I mean, I think you've got a great point that as many producers that we have out there listening, a lot of them don't like to use straight futures, but margin calls always scare someone, cash flow scares someone. But believe it or not, if you took like fishing line and strung it up in your 100,000 bushel corn bin out there, there's a lot of money in there too. And And you lose and gain that much money with all these moves too. So whether it's in the bin like that or in your trading account, it's the same thing. Yeah. Selling the board is a very good way to say, I'm going to sell the board, I'm keeping the corn on farm, and then I can negotiate my basis later. Please don't fall into the whole, well, it's free DP, I'm going to haul it in there and hope for a better basis later. Now, let's just think about that a little bit. If everyone hauls in because it's free DP, how much better do you think the basis is going to get later? Or if you do an HTA. So yeah, the only way to really get basis is to trade it just one time, and that's to have control of your grain.
Let's flip over to soybeans, and this might be where we bring in South American weather to talk about. As we saw, maybe some spreading between meal and oil there on the day Friday. I mean, bean oil was very strong, but soybeans and meal lower. And you think about the South American conditions, we're hearing some of this chatter about potential quality concerns, et cetera. What's your view on the soybean complex right now, Dwayne?
I generally bearish. I'm sorry to say. I look at soybeans and think, why do we have to even be 1050 now? With inflation and corn's at a higher price, the ratio's out of whack, but we've got plenty of beans in the U.S. now. Crush demand is great. Looks like crush demand is going to be phenomenal on the Monday report for the month of December. But the biggest thing I want to take away, Jesse, is that within the next month here, the month of February that we almost skipped over, we're going to have one huge crop harvested in Brazil, just a monster crop. We'll have those beans to deal with in the world. And Brazil is almost going to have a fire sale on those beans because they can't store them all, Jesse. And yet quality concerns, everything else, they're going to want to move them. And I think China knows that. And so they're going to try to buy them as cheap as possible. I think over the next couple of weeks, we're going to find out Brazil's soybeans are $1.50 lower than ours. So that's not really a bullish story for me. So you're right. Meal and oil, they have their own stories. Oil really rallied today based on the fact that maybe canola out of Canada oil will be taxed. So a lot of moving parts there. But in general, I just got to say, I'm just kind of bearish to soybeans.
Well, I'll flip the conversation over to new crop here as we talk corn and beans. You got 460 new crop corn. You got 1050 new crop beans. And you made comment earlier. I mean, I think about just how corn and beans and the ratios are really kind of out of whack here, so to speak. I mean, we're not buying bean acres in the U.S. this spring at these price levels, are we, Dwayne?
No, we sure aren't, and that's fine. Right now, my guess is we gain about 5 million acres of corn, and we probably lose about 4 million acres of soybeans. And the balance sheets are balanced if that's what's happening. So that ratio should be out of whack. That's perfectly fine. But that doesn't mean we can't still have a rally in beans. We still need to raise a crop. If you lose 4 million acres, I mean, you better have that trend line yield. If I drop the yield down to 50 bushels an acre, all of a sudden our ending stock is below 400 again. But yeah, those ratios are really out of whack. You mentioned new crop. A tool we started to use this week is those short dated new crop put options. And bear with me a little bit, Jesse. I'll explain them a little bit more in detail for anyone who doesn't know. So a new crop option that goes off your new crop contracts, December corn, November soybeans, but you can buy them through different time frames. I really right now like the March short dated new crop 460 corn put. You can buy it for about 5-6 cents here. That gives you a month time frame and an important month. That's when we set crop insurance over the next month. So in one way, buying those puts a floor on crop insurance prices. And then at the end of the month, the 21st of February, when they go into expiration, if we're below 460, you can either just take the profit or you can change and let those be short futures positions and have a short hedge on the board. So once again, using all the tools, like you said, you have access to. And here's the thing, if I'm wrong and the market rallies, you're out 4 to 6 cents. Not the worst thing in the world.
Dwayne Bussey with Bolt Marketing is our guest analyst here today on the show. Dwayne, how about that wheat trade? That's been a tough market to gauge, wheat doing wheat things. I like to throw that adage out there every now and then. What's your take across all three complexes as we closed out the month of January?
Overall, I like it because I like the chart pattern, the trade action. Volatility has been increased. We've been jumping back and forth here a little bit. I think we're making a low, and we should, Jesse. We talked about ratios early. The corn to wheat ratio is way out of whack. Wheat in general just seems too cheap to me. Our world wheat stocks to use ratio is actually the tightest it's been in about 10 years. So, I mean, there's a story there. The problem is, of course, no one's buying our wheat. We're not running out of wheat. Russia's going to have a smaller crop, but there's rumors and talk that Argentina and Australia will counteract with bigger crops. But no, I like what wheat's doing here. I'm not wheat's wheat, as you said. So I'm not saying go out and buy 100 contracts of wheat and live in the streets or anything, but just I like the bottoming formation. I really like our spring wheat market up here. I think that needs to buy acres or not lose as many acres. And, the whole tariffs with Canada, we'll see how that goes come Monday. Maybe that could have effect on spring wheat.
I was gonna say, and you hit that point. I wondered spring wheat specifically. I mean, between Canada and the US, if that's something that ends up being on the tariff block here, because I think we should say this as well. When it comes to these tariffs, we don't exactly know what's all going to be impacted here. There's been talk that maybe President Trump will leave oil out of it. Mexico's put out a list of things that include pork and cheese and apples and leave out other things. Bourbon whiskey's on Mexico's list, So it's like there's still a lot of uncertainty here as to what exactly could be impacted.
Oh, and nothing but uncertainty today. I mean, just unbelievable. Yeah, like I said yesterday afternoon, I thought everything was going to be, have a 25% tariff on. And then, then you get this list. And when I looked at the list, it almost kind of felt like, so everything that's important won't be on the list that any one of the countries needs. So it made me feel like, well, what's the point of it? And then, I saw bourbon was on the list, and me, that freaked me out right away. I was like, whoa. I almost made a phone call into POTUS right there of like, hey, let's be careful with these tariffs here. No, I joke, but it's really hard. But I bring up the key term uncertainty, and markets usually don't like uncertainty. And then when I think of where the funds are at, extremely long corn, getting to be long some soybeans, extremely long cattle, if they don't like uncertainty, maybe it's easier to just take profits and leave. And I got to say, I'm actually fairly impressed with the way the market's handled the uncertainty today.
Let's go over to the livestock sector. Cattle, since the last time you and I talked, and we've set records. Cash has been on fire. Futures have been on fire. We kind of set futures back a little bit, though, here through the week this week, and then found some strength on Friday. But you take a look at this cattle market as a whole. Dwayne, what's your perspective? What are you feeling here as we move into February?
Ever since we broke 200 in the live cattle futures, I started to tell people that I think this is the start of what I think will be the parabolic top. Let me try to define what I mean by that. I think it could be a big top, but I think it's going to be short-lived. Which doesn't really help the listeners out there. They want us to pick the top, and my God, no one can do that. But I'm trying to narrow it up for them, and I'm trying to tell them that I think it's going to happen fairly soon, but I could be $15 off the high. Now, I said that at $2, essentially the cash is $2.10, $2.12, some even higher. I'm nervous, Jesse, I guess. It's fun, and I've got all these cattle producers that want to wait for the high. And if you can still be bullish and still use risk management, though, Jesse, you know that very well. You buy put options, buy LRP, and hope they're a complete waste of money, but do something. My thoughts on the cattle market is it's very strong here, but with the funds long 40% of the total open interest, it's not really up to me, Jesse. It's up to them. If they decide they're uncertain about tariffs and want out of positions, $30-$40 per hundredweight drop isn't out of the realm of a possibility. And I just think of a lot of our producer friends out there, and I don't want them to go through something like that. So actually, this is horrible radio and podcast, but to ask me what I think about cattle, I want to say it doesn't matter. Just do your risk management, be protected.
That's a good point. No, I think it comes back to those age-old fundamentals of know your break evens and do what's best for your operation. And I mean, Dwayne, to your point, we can't call a top here. We can never call a top in these markets. It's impossible to do. If we knew how to do it, we'd all be billionaires. But you look at just the fundamentals and the layout here, and I think everyone in the trade is a little nervous. Cattle inventory report, we're talking ahead of that release. Don't expect that to change the narrative at all here, at least from what I've seen and heard and read. And so to your point, it just feels like a market that eventually the other shoe's going to drop, but hard to say when.
I know it. Yeah, like you're nailing it there. It just makes you very nervous. And we got to remember, if we talk to our chart fellow friends, right, the good guys that can read a chart, there's no resistance anymore. There's nothing to go back and look at. So that's what I mean by a parabolic top. I mean, it can go to 220 on fats. I don't know. Sadly, I've heard some guys need 220 to break even, and that's the part that makes me nervous. Is just put a floor in place and let's hope that the bulls are right and this thing goes higher. But yeah, it's amazing. What's also amazing is consumer demand. I mean, we seem to be keeping right up there, but I don't know. Eventually, that runs out. But I think we've said that for a year and it hasn't. Now, on that cattle inventory report, I don't think you're going to see anything drastic today. But I will say, I think we're keeping back more cows and more heifers than everyone thinks. I know the economics behind it say to sell, but I think I was the first one to admit that we've been telling these guys, you can't keep heifers back for the last 4 years. Well, guess what? You can't sell them every year and keep your herd size up. So I think they've gotten to a point where they're keeping their heifers back because look at the cattle numbers. They make a lot of sense right now. And that makes me nervous again, too. So I'm rambling. Yeah, I'm nervous, the cattle market.
I'm going to hit you with one other thing here on cattle. You mentioned that you've heard from a few folks that they might even need 220 to break even. And that's an interesting question that came up earlier this month on the show, is that, we got these high price levels, but are we having trouble actually making a profit with the way this market is right now?
I think some are, as far as penciling them out to April and June timeframes anyway. Yes, the guys who bought yearlings, that looked like a crazy price at the time, and I think they're doing just fine, probably making some money. But what I've also heard from guys is, because they see the price of calves now, they're keeping these yearlings in the feedlot longer and longer because they just don't want to go spend the money on these high priced calves. So what does that equal? That equals this huge carcass, right? Now, this week, for the first time, carcass weights are actually down week over week. But Jesse, our carcass weights are 55 pounds heavier than they were 2 years ago. Our beef production in January so far this year is higher than it was a year ago. A year ago, fat cattle prices were 155. So our numbers might be down, but our beef production is actually higher. So just don't get too bulled up here. I mean, I love being bullish, and these shows are a lot more fun when I come in with just big bull horns. I have to duck my way in to get in the video, but it's just not my job, and I wouldn't be doing my job if I didn't tell people I'm a little nervous up here, and honestly, just flat out leaning bearish the cattle market.
We can't always have the bull horns on as much as we'd like to. I should ask you the hog trade real quick. A bit lower in front month futures there Friday, but hogs have been maybe getting some spillover from cattle. Any notes in the hog sector?
Yeah, I think the hogs saw pressure today only because of the tariff talk. Mexico has. You talked about the list of what's going to be tariffed, what isn't. Mexico has hogs on our tariff list, and they buy a lot of hams from us. So that's why the hog market took it rather tough today. If we can get through the weekend and there's no new news, which that sounds kind of just stupid, me even saying that when it came out of my mouth. But let's just say Monday news is quiet. I actually really like this hog market then. I keep hearing about these diseases, right? PRRS is really firing up again, some 40 to 60% damage in hogs in some barns, a lot of death loss. That's one story, but I think the biggest story here isn't hogs. I think it's chickens. Us having to cull and kill a lot of chickens due to bird flu. Now, all of a sudden you go to a supermarket and you might see pork as the cheapest meat. Chicken went above pork here in some of these cases. That to me is why I'm pretty friendly to the hog market. Demand's going to pick up here, and it sounds like the numbers might not be as high as we thought this summer.
Dwayne, great stuff. If folks want to reach out to you there at Bolt Marketing for a conversation, how can they get in touch with you?
Yeah, if you want to have a fun conversation, they can go ahead and call 605-448-2365, and we can give them all the info about these tariffs and all our expertise here. Or they can check us out online at boltmarketingllc.com.
We'll get our popcorn ready to watch what's going to happen here as we move into the month of February. Dwayne Bussey, Bolt Marketing. Always good to chat with you, my friend. Thanks for joining us here on the show today.
Hey, thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.